We will go right away ahead in our program because now we have a person who is responsible for an utmost of infrastructure of utmost importance in the financial services industry. We're talking about Gottfried Leibbrandt of SWIFT. He has not only been for more than half a decade the CEO of SWIFT, before that he has already been working for SWIFT and before been with McKinsey. He has also been very instrumental for those who are within the FinTech industry are in the know by at the very early stage initiating InnoTribe, of which quite a bit of innovation happened to turn out from what is today's FinTech scene, results from that initiative of Gottfried Leibbrandt and SWIFT. He will be interviewed by Caroline Hyde, who is, as I learned today, still London-based, and I'm pronouncing the still here because she is about to move towards the middle of the year to Germany and will report out of Berlin and hopefully increasingly also out of Frankfurt. Caroline is regular interviewing chief executives, finance officers and politicians ever since she joined Bloomberg in 2008. So I think we can look forward to a very interesting discussion. Caroline, Gottfried, the floor is yours.
Thank you very much indeed. And it is my great joy to be here from Bloomberg Television. I joined the week before Lehman collapsed, so always a good way to start. And I wanted to actually bring up, sort of to a certain extent, where we stand in this whole FinTech debate, because I think it's fascinating, really. It was a year ago, April 2015, that we heard from none other than the man behind who leads the biggest bank by assets in the world, Jamie Dimon, of course, of JP Morgan, saying Silicon Valley is coming. He wrote it in his letters to his investor base. And 1 year on, he's then just took to the airwaves a week or so ago, warning us about some of the weaknesses within FinTech, the lending club debacle that is currently unfolding at the moment, the fact that the chief executive had to resign, having been found to altering dates of loans, among some other things. Silicon Valley, FinTech, has it arrived? Is it still the dawn? Are we now at midday when it comes to FinTech here in Europe? I'm very pleased to say let's get straight into the infrastructure view, because you must have such a fascinating bird's eye perspective. 11,000 institutions that you're working with, 200 countries, of course, in which we see these transactions that you are helping standardize, the messages that are being transported. Gottfried Leibbrandt, wonderful to have you, SWIFT Chief Executive. First of all, are you being disrupted?
Are we being disrupted? That's a good question. For me, disruption is one angle. What I'm seeing actually more than disruption is challenge, being challenged. When I think disruption, I really think of what's happening to the taxi industry or the Airbnb. And in FinTech, let's start with the banks and then we'll get to SWIFT. I still think the jury is out whether it is actually complete disruption and disintermediation or just challenging. And I've been in the industry for a while still at one of your sponsors, McKinsey. I witnessed the previous FinTech wave in the 90s. And for those of you who were around, and looking at your age, many of you were around in the 90s.
Don't take it personally.
Goes for me as well. When we had the previous wave in the 90s, I remember we were living that in McKinsey. You had these challenges to banks. You had internet banks, pure play banks, banks that only lived on the internet. You had direct brokerage. We had the first wave of cryptocurrencies, Mondex, if you remember that. We were all going to be on smart. The money was going to be on a smart card, and you would pay everywhere. And we had similar discussions. Are banks going to be dead? Are they dinosaurs? Bill Gates famously came out with the statement, banks are dinosaurs just waiting to become extinct, or they're already extinct, but they don't know it. And to be fair, with hindsight, I think it played out a little differently. I think banks took up the challenge. And if you look at a bank today, and for those of you who work in banks, they've been busy places. I mean, they're completely different from 20 years ago. The role of the branch has been completely redefined. Your bank, at least my bank, or banks, I should say, now lives on this thing. I can access it 24 hours a day. They have integrated the internet into their offering. You really don't need to go to a branch if you don't want anymore. They interact with their consumers in a different way. And I think they have to a varying extent, really taken up the challenge posed by FinTech and adapted themselves. And the pure plays, many of the pure plays, I think very few of the pure plays have made it through the big extinction of 2001, the first dot-com burst. I can think of a few examples that made it through. One of them, again, is here. ING Direct was a pure play, and they made it through. I think that's a good story. PayPal made it through. But other than those, I'm hard-pressed. Many of them fell by the wayside. Mondex, all of these direct brokerages, etc. So for me, it remains to be seen, are we going to see, and I hope, the banks at the end of the day are my users and owners, I hope that they're taking up the challenge to really adapt their services. And there is plenty of room for adapting and improving their services. There's plenty of room for innovation in payments, etc. So what I would hope, and to some extent I'm seeing, is people come up with really innovative and frankly better solutions. And then the banks leverage their existing customer base and offer them these improved services. And a lot of what I'm seeing is also cooperation with FinTech companies, where FinTech companies offer their services through the banks, and then you get the best of both worlds. You get the agility and the innovation, and yet offering that not just to a few consumers who switch banks, but to everybody who's out there.
I mean, it's interesting the fact that Swift in itself was in the 70s, you know, a round of fintech in and of itself. Bloomberg itself can call itself a fintech company as well. Give us a sense before we dig into exactly how Swift is responding to all of this, but from your bird's eye perspective, is there cooperation going on at the moment between banks and fintech? Are they building their own internal fintech competitors? Are they looking to purchase others? Are they watching to see what flourishes and then pick off and decide to perhaps take assets where it seems to fit their business model?
Yeah, I think it's playing out, but to a lot of extent there is a lot of cooperation, and some of the big fintech plays are cooperating already. We made a tour. We do regular tours with my colleagues in Silicon Valley. The most recent tour, we've visited a number of companies, all of whom are marketing their services to banks successfully. Data mining companies, security companies, app development companies, and all of that. So I do see a lot of that cooperation going on. Some of it is competition. It's a mixture of both. People who challenge the primary function and yet at the same time offer their role sort of at the back end, and you see a little bit of both going on. We see that in the payment space a lot. And payments has always been around that mix of cooperation, because a payment typically is between two people who aren't at the same bank. So by nature you need cooperation, and at the same time you need to compete. So that's not new in the payment space. But we see that, and I can take one example to get back to your question, are we being disrupted? One area that I worry about a lot, we can talk about cyber later, that's the one that I really worry about, but what I also worry about is cross-border payments. Cross-border payments is a business model that has been around, I think, from the Italians in the 15th century. It's you hold accounts with each other as banks, and you use at the end of the day that to affect cross-border payments. That's how all cross-border payments work, one way or another. And that fundamental model hasn't really changed that much. People have invented faster ways of doing it. We are part of that. We're a network where all these messages for correspondent banking are exchanged. But you see now a generation of consumers growing up that says, why does it take days for money to go from country A to country B? Why don't I know where the money is? The old joke is, when I order a book on Amazon, I can track the book, but not the money, and the book may get there before the money gets there. And I don't know how much money is going to end up at the other end, because the fees aren't very transparent. So I think there is a challenge for banks to do that. It's not easy, because there's a reason all these things are as complicated. Banks do have to do the AML checks, the sanctions checks. There's a lot of stuff hanging on the plumbing. At the same time, I see new services, and many of them I use myself when I transfer money, and it's always good to learn from competitors that really are innovative about it. One of the innovations I love is that the new operators in a much better way screen the information when you enter it. So when you enter a payment to another country, they will check up front, which country is it? Do you need an IBAN or a basic security number? Does the name need to match the branch? Does the branch code fit what we have on file for that country? So they do upfront cleaning for all 180 countries in the world before they pass it on to the back office and then over SWIFT or another clearing network. Some of the banks do that, but not all. And that makes a huge difference, because the more you can clean it when it enters, the less rework and exceptions, investigations, as they're called, you have later on. So I think there's lots of learning, and some of that will be through competition, and some of it will ultimately just be adopted.
What new practices are you having to put in place to react to this changing world, to the new players that are coming on board? It sounded like you're sort of talking about the transfer wises. How are you having to change your plumbing, to use one of your phrases?
Well, again, there's a lot of change in the payments industry, not just fintech. We also have the Euro challenge. I mean, the Europeans have completely rewired their payment system following SEPA. And it's good to take a step back there also. 10 years, well, first of all, we had different currencies, but even 10 years ago when we had the euro, it was difficult even in Europe to transfer money from country A to country B. Now it is low cost, transparent, immediate, and the banks have essentially built a host of new infrastructures to make that possible. I think the other big thing that's going on now is real-time payments, where banks are again building new infrastructures to make all these internet payments possible in real time. To be fair, it is not a new one. I have to give credit to the credit card industry, no pun intended, but they solved a problem 20 years ago, which is magic. I mean, you go into any country, you show your Master or Visa card, it's immediately accepted. They check within a second whether there's enough money in the account. You could be anywhere in the world, and lo and behold, you buy the goods and it gets settled somehow. So it is not entirely new, but I think we're now looking for plumbing that is easily integratable in all these new apps and consumer-to-consumer applications. That's what the banks are doing. They're also taking a look at correspondent banking. We're helping there. We're having a big initiative to help the banks make correspondent banking faster, more transparent and traceable, so you know where the payment is. We're helping banks with all of the challenges around compliance, so the AML and sanction screening, know your customer that they have to do as part of the payment, which is a big burden on them. And most of the banks say, well, that's just the cost of doing business. Nobody gets a competitive advantage through having better KYC, so isn't that something we can share? And we and others are building common infrastructures to make that possible.
You said you like to try out these new products, and when you've been transferring money around. I also know that you like to have a bit of a play with the dreaded word that is blockchain, or shall we use distributing ledger technology. Can you first of all do the awful thing for us, because I'm sure no one else wants to, and explain slightly what blockchain is for those who potentially aren't completely up to speed on it?
Yeah, I can do that, and I'm a bit of a geek by background. I did coding in my young years, so I've been fascinating for this by about 4 years now. I had the ultimate joy of having a daughter who is 17, who is also going into computer science, and she's doing a project on blockchain now, so I was able to explain to my daughter how it works, which is always a great moment for a father to do that. Essentially, at the end of the day, it's easiest to start with Bitcoin itself. What Bitcoin is essentially a ledger of who owns which Bitcoin, and the who here is a public address, which is a string that is tied to a private key that the individual holds, and if you can put those together, you can claim the ownership of those Bitcoin. So it's essentially a long spreadsheet of this person owns that, and that coin has been transferred from that person to that person. It's done in blocks, and each block has integrity checks on that block, and part of the integrity check depends on the previous block. That's why it's called a blockchain. And every 10 minutes, all the transactions in the world are amassed into a new block that is then voted upon by all the participants in the chain. They vote, do we think this is the right block to add or not? And to make sure that voting is done fairly, and you cannot rig the system by just submitting 50 votes, they require what's called proof of work, which means that it's not cheap to enter a vote. You have to do actual real work, which is calculating a hash for those that are into it on the block. Essentially, the people that do that are the Bitcoin miners. They get rewarded for that, but that just serves to keep the system honest and make sure that not a single person can vote on his own transactions. So what it is a ledger, and that's why it's called a distributed ledger. It's a ledger of who owns what and what transactions were done. Everybody gets a copy of it, and it gets continuously updated, and it keeps track of who owns which Bitcoin. That leads to a number of interesting uses. One use is you can use that not just to register ownership of Bitcoin, which is a cryptocurrency, but you could also use it to ownership of real money, or ownership of bonds, or ownership of houses, or ownership of diamonds, ownership of anything that you want, and keep track of that in a way that is transparent to everybody. Easily verifiable, he owns that. It could be anonymous. This number owns that house, and then discoverable one way or the other. And that potentially can solve a lot of problems in the industry, in terms of faster access. Right now, if I need to check who owns which stock, for example, for proxy voting or for tax purposes, I have to go to a custodian, who has to go to a sub-custodian, who has to go to a CSD and check that. If it would all be in a ledger, it would be very easy for all the participants to easily check that ledger through simple APIs and do their processing with it. So one is you can use it to keep track of who owns what, and thereby presumably make processing chains more efficient. And one of my interesting, I yet have to convince central bankers of doing that, being very conservative by nature, the central bankers that is you could put central bank money, a limited amount, in such a distributed ledger and make central bank money tradable 24/7. You would no longer be restricted by trading hours, just like cash. Whenever you and I want to exchange it, we can do that. And you could do the same with bonds and whatever. It's not as easy as it seems, because in practice, around the trading of securities, around the trading of houses, there are a lot of other processes that need to be done as well. You can't just sell your house. People need to verify, did you pay off all your bills? Is it insured? There's a whole slew of stuff around it. And the blockchain in itself does not replace that, but it could potentially make these processes much more efficient. And these processes take up a lot of time and money in the back offices of banks. The other thing that it can do is it makes it much easier to share information among institutions, because you have a common understanding of reality in a verifying. There are integrity checks on that through these blockchains. So if two banks, for example, keep accounts with each other and they need to reconcile stuff, they can have a private blockchain, as it is called, and they both work on the same version of reality, rather than having to send back and forth their version, reconcile it, etc. You could make a lot of these processes between parties more efficient. So those are some of the areas that people are exploring. I've learned from history that new technologies are seldom evident, and some make it, like the internet has been a smashing success. I also lived through smart card technology with Mondex and so on. That didn't make it in the end, and yet everybody thought it was the next big thing. So we'll see. I think it has great promise, but people need to find out in practice what problem can it really solve, and is it more efficient, is it not? It requires adoption, which is never an easy thing, so we'll see. We as Swift are involved in it and really taking a look at these technologies. We're trying it internally, we're trying it with banks, but I have to be honest, that's in play mode, proof of concept mode, as it is called. I have yet to see a big initiative where all these banks say, we're going to take this process and put that in the blockchain, but we'll see.
If it did really work, if it did take off in the same way that we've seen the success stories of the internet, who does that disintermediate, and who disappears? What could be the massive scale repercussions of blockchain really working?
Yeah, I think that really depends on what will be the most popular application. If it really could use as ownership of bonds and equities, for example, who needs CSDs anymore? And you could ask even about custodians and sub-custodians, although, again, we just put out a paper with the Swift Institute a couple of days ago. There are many steps in that process done by custodians and sub-custodians that the blockchain would not replace. You still have to do tax verification, compliance, and all these things, and somebody has to do that at the end of the day. But you could see disintermediation. If the whole world were to go Bitcoin and send Bitcoin to each other rather than go through the banking system, yeah, you wouldn't need the banks, and you wouldn't need Swift. I mean, that's ultimately you can. So I think it will really depend. It could also be, if it's just a way to reconcile information between banks, then I think it will just help banks become more efficient. And I'm not sure it would disrupt. It could disrupt Oracle. It could replace databases. And I think a lot of the database providers and technology providers are really looking at it, because again, for them too, it could disrupt them. But at the end of the day, the banks are going to be looking for industrial-grade suppliers of this software. They're not going to buy it from fly-by-night operators if it runs their back-office systems. So there's an opportunity for the existing database. IBM is all over this, Oracle is all over this, etc. And we may see a world whereby they offer a blockchain distributed ledger suite of products to put inside your existing processes and databases.
So it's not farewell central banks quite yet?
I don't think so, no.
You brought up another concern of yours, and I want to return to that: cybersecurity. What is enough being done at the moment to recognise the severity of the threat?
Yeah, so this one, I became CEO 4 years ago, and from day one, I think I've told everybody the one thing that keeps me awake at night is cyber. That hasn't changed, and part of that is because at the end of the day, the banking system handles money, and the old joke is always when the bank robber is asked, why do you rob banks? Because that's where the money is, and I think that hasn't changed. Banks handle money, they handle information, and therefore cyber is a real threat for everybody. So I think the industry led by banks and their infrastructures has been at the forefront of investing in it, and banks have probably made more cyber investments than anybody else in the industry. I mean, you can look at hospitals, electricity systems. I think they're now playing catch up because of cyber warfare type threat, critical infrastructure disruption. Banks have been at the front, but they should have been at the front because of the money angle. And I think that is a continuous arms race. The cyber technologies keep getting more sophisticated. The players in there keep becoming more convoluted, if you will. There's no, you have governments in there, you have crooks in there, you have political operators in there. So a lot of people are active in that space. So it's an arms race, and that means that it's going to be continuous investment for everybody. Absolutely.
I mean, there really was a light shone on it in the media with the Bangladesh bank incident. Have you got any takeaways from what happened in terms of money disappearing from that particular bank?
Yeah, I mean, I can talk about takeaways. For the specifics of the case, I'll have to refer you to statements and all of that. Otherwise, I'm going to get my spokesman dragging me off stage here. But I can confirm that at the end of the day, we weren't breached in this. It was, from our perspective, a customer fraud, as there are more, and there always will be frauds at the bank end of things. So from that perspective, it happened at the bank end of the business. I don't think it was the first. I don't think it will be the last. But it got a lot of headlines. I think it just underscores the size of the challenge. It really underscores how serious this is at the end of the day. And yeah, in the old days, you need to put on balaclavas, have guns, and storm the bank vault. In these days, you can do it from the privacy of your own home. So that, for banks, I think, is a challenge. I think there's good news as well. For me, one of the insights, again, from these Silicon Valley tours and talking to the insiders is we always thought innovation can really help, let me put it that way. We always thought that this was the ultimate security nightmare, right? I remember 6 years ago, people said, if you worry about PCs, mobile phones are full of holes, they're a security nightmare, it's going to be worse, etc. And actually now, if you talk to the experts, they say, with hindsight, this may be more secure than even an Apple PC.
You need a fingerprint, for example.
You have fingerprinting, it's tied to the individual, it tends to be more closed down than the PC has been traditionally. A lot of new techniques are coming out to do monitoring, to do pattern recognition and all these things. So I think the good news is this is one of the areas where I see a lot of innovation as well. And that could be a real help for the industry, for their infrastructures, and for everybody. Absolutely.
So we talk about the growth of FinTech, but is the growth of the dark traces, the companies that are there helping protect us against cybersecurity, the level of innovation is impressive there, you feel, particularly within Europe?
Everywhere, I have to say. I mean, you can go around the world. I would not bar the third world countries. There's some really interesting innovation taking place in emerging markets, often leapfrogging technologies. We have the e-identity project in India, where they're issuing digital identities to 1 billion people. M-Pesa in Kenya. And we can go on. There's a host of, I wouldn't call it emerging markets, but China is a total hotbed. I mean, we can only dream of the success of Alipay and what we see there. And then the US and in Europe as well. I mean, a lot of these unicorns come out of Europe. You mentioned TransferWise. They won 4 years ago. They won the InnoTribe Challenge. That's how I know them. They're now. I have to check whether that's still the case, but at some point they were worth $1 billion, so they were a unicorn based in London. And by the way, a lot of European fintech companies are based in London, operating to the previous speaker, operating under a European passport. One of the things that Europe has got right is this European financial passport. That if you have your license in one country, you can operate through Europe. We'll see how Brexit avoids.
Yeah, does that remain?
Maybe a bit of an issue, so let's hope that the UK stays in the EU from that perspective. But we see and not just London. I think Frankfurt was mentioned, Germany was mentioned. My own home country, Holland, has a lot of these startups. So yeah, I think Europe is very active, but it's not restricted to any geographical region. No.
And sort of as we wind it up, give us a sense of your view on the currencies of the future as well. We were talking about blockchain, but have you got a view on whether we will be using far more currencies in the future? Hopefully not because of any Eurozone concerns.
I was just going to say that would be... I come from a world where I used to carry these bags with different currencies when I was still a consultant traveling around Europe. You'd have like your Belgian francs, your French francs, your Deutschmarks, and whatever. So I hope we would never go back to those days. I am a firm believer that at the end of the day, you want your money to be backed by men with guns, as somebody put it. The fact that I truly believe that good money has a government behind it that has taxing power, and at the end of the day, I think money is not backed by gold. Money is backed by the taxation power of a government. That's my firm belief, and the two are very intertwined. I think if you look at history, money's emergence is closely tied to the emergence of taxation and states. I don't think money started as shells and whatever. I think money started with taxation, to be honest. So in that sense, I'm a first believer that the best money is still government money, and I'm very skeptical of a major role for money that is not backed as such. Like Bitcoin, we'll see. My take on Bitcoin is it is still the digital equivalent of a $100 note in terms of use for illicit stuff, etc. A lot of it is the same usage as large denomination cash at the end of the day. But I have a hard time seeing that replace truly government money in everyday society.
And you just said 4 years ago you spotted TransferWise and they won an award from your business. Who do you like right now? Who should we be going and buying stock in?
I will not say anything, otherwise Natasha again will be on stage to yank me off here. So the compliance officer will be all over me. No, I don't. And by the way, trust me, don't take investment advice from me. If I were a good investor, I would not be doing this job. So.
We'll just watch out for your awards. Gottfried Leibbrandt, Swift Chief Executive, thank you very much indeed. A fascinating conversation. And I know that we'll be delving much more into FinTech in a moment. But please give it up to the CEO of Swift.